Welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're talking about something every trader struggles with at some point: discipline. Specifically, how to go from being an impulsive, reaction based trader to someone who trades with patience, structure, and control. The kind of trader who doesn't just survive the markets, but thrives in them. We've all been there, chasing breakouts, panic selling at the bottom, jumping in because of FOMO, or revenge trading to make up for a loss. And if you're constantly asking yourself, why do I always sell too early or too late? This episode is especially for you. So let's dive into the mindset, tools, and daily habits that turn emotional traders into consistent, confident ones. Let's start with a foundational habit: keeping a trading journal. And no, it's not just for beginners. Every serious trader I know, myself included, logs trades. Not just the entries and exits, but the thought process and emotions behind each decision. Write down why you entered the trade, what setup you saw, what the conditions were, your emotional state, your target, your stop, and what happened. Then reflect. Was the trade impulsive or planned? Did you follow your system? Journaling slows you down and gives you data, not just chart data, but behavioral data. That's how you spot patterns and fix them. If revenge trading is your vice, your journal will make that crystal clear. If you constantly exit too early, you'll see it. Awareness is the first step to change. Next, set your trading rules. And I mean write them down like a code of conduct. These are your non-negotiables, your mental firewall. For example, never risk more than 2% of your account on a single trade. Only take trades that meet all your entry criteria. No trading after 3 consecutive losses. No chasing breakouts based on hype. No trading during news events unless it's part of your strategy. These rules aren't there to restrict you. They're there to protect you from your own worst impulses. When your money is on the line, emotions run hot. Rules keep you cool. Now let's talk about the Fear-Greed Index. It's one of the most underrated trading psychology tools out there. It's not a signal, but it's a sentiment gauge. When the index shows extreme greed, it's often a sign that markets are overheated, maybe even due for a pullback. When it shows extreme fear, it could be an opportunity, a reminder to stay objective. Don't get swept up in crowd emotion. Markets are emotional machines. Your job is to stay grounded. Let's shift to structure, your daily trading routine. Most people build a strategy, but never build a routine. That's a mistake. The way you show up matters. Start your day with clarity, maybe meditation, a walk, or journaling. Then check the news, review your charts, prep your setups, set alerts. During the trading session, stick to your plan. No winging it. At the end of the day, review everything. Win or lose. Reflect on what worked, what didn't, and how you handled it emotionally. Discipline lives in routines, not just in rules, but in repetition. If you struggle with overtrading, here's a great rule. Limit yourself to 1 trade a day. Just 1. Make it count. When you do this, you start to prioritize quality over quantity. You stop jumping at every signal. You wait. You become a sniper instead of a machine gun. And with that, your performance and confidence shifts. After every trade, don't just look at your PL. Ask the right questions. Did I follow my plan? Did I act on emotion or logic? Was this trade part of my system? If it was a win, did I stick to my target? If it was a loss, did I respect my stop? That's how you separate luck from skill. That's how you grow. Now here's something most traders skip: studying trading psychology. Not just price action, your own behavior. Listen to podcasts that go deep into how your brain works in markets. A great one is the Crystal Ball Markets podcast. They break down everything from FOMO and fear to discipline and mindset. Plug it in on your commute or your lunch break. Make mindset training part of your routine. Another vital habit: walk away when you're emotional. If you feel revengeful, anxious, or euphoric, close the laptop. Go outside. Move your body. Reset. The best traders don't just know how to enter, they know when to pause. Emotional decisions are the most expensive, and while you're working on discipline, practice in a sim account. not just to test strategies, but to test yourself. Can you follow your rules when it's not real money? Can you wait for confirmation? Can you exit when your stop is hit? Sim trading is where you build muscle memory, mental memory. Need a solid, clean, beginner friendly platform? Try crystalballmarkets.com. It's simple, fast, and designed to support traders who want to learn the right way, with real tools and without pressure. One of the most powerful mindset shifts you can make? Zoom out. Think in weeks and months, not in ticks and minutes. You're not trying to win every trade. You're trying to manage risk across 100 trades. Discipline means letting go of the need to be right now and focusing on being consistent over time. So, what's the takeaway? Discipline isn't some magical trait you're born with, it's something you build day by day, habit by habit. And it's what separates emotional, reactive traders from consistent, profitable ones. Start with a journal, set your rules, build a routine, limit your trades, reflect after every session, study psychology, practice in a sim, walk away when needed, zoom out, and above all, stick with it. You won't be perfect, but with time, you'll get sharper, calmer, and more in control. Want to take the next step? Head over to crystalballmarkets.com. Whether you're starting with $50 or $500, they've got the tools to help you grow at your pace. And for weekly mindset boosts and deeper dives into the psychology of trading, make sure you subscribe to the Crystal Ball Markets podcast. That's it for today. Until next time, trade smart, trade patient, and stay disciplined.